This is the best video of the week, the weekend edition. My name's Dez here at Grok Trade. This video is good all weekend long through Sunday, April 19th, 2015. Let's take an in-depth look at what's taking place here in the markets on Friday. Markets had a sizable sell-off with some deep drops on the major indices. Now, we talked about on Thursday a tweezer top formation. So let me zoom in here to the spider. And again, the spider, SPY, is the exchange traded fund, or in short, the ETF of the S&P 500, which gives us volume 2. Tweezer top, good chance of a reversal. Boom to the downside. Big drop on big volume. Look at this volume, almost double the normal volume that we've seen in a while. Big drop. However, on the S&P 500, we drop. We went below a major trend line. If we broke below that, we would have been in deep trouble. However, by session's end, to close out the week, we rallied back closing, but below the 20-day moving average. So the bottom line is we're still within the confines of this huge rising wedge, and that rising wedge is seen here with the blue lines. We're in a major support area. That major support area, if it's broken, will prove to be very bearish for the markets. If it holds, you'll see a nice rally, maybe strong enough to blast through this resistance line. Now, I took this big trend line from those 2 points here and moved it to this point and this point, since we had such a sizable drop today. So I did move that one. Let's go to the Nasdaq. The Nasdaq, though, on the other hand, had a big drop and closed below a major trend line. So let's take a look at this trend line. It goes way back here to October 2014. Comes up, finds shadows here, big time support there, and now that support is broken. That is problematic, big time trouble and problems for Nasdaq, especially with huge volume confirming this drop. I'm going to go to a 1 hour chart here and show you the big volume came right at the open. Boom. Another chunky volume here, and then this volume you'll see was higher than normal on this white candlestick, but most of that candlestick right here, the upper part, is bearish. So really not good at all. A lot of bearish volume here. It looks like things could get squirrely and quickly, meaning that the markets could fall out of bed. There could be blood in the streets. This thing could just start crashing and burning. I'm going to go to small caps. This is the Russell 2000, and I'm going to put an exclamation point off of my concerns here. Look at the rising wedge. Support, broken. Support broken on confirming volume. Bad news, we have one more area of support that might act as some sort of support. I'm actually going to bring this up to those shadows. We hit this shadow, this shadow, this shadow. So these shadows I'm really good with. So that's a good point. Here, if the Russells go lower and close lower than Friday's close, woe to the markets. We'll be looking to go short this dog. Here we are back at the S&P 500. I'm going to go to a weekly chart here. Now, these lines are drawn on a daily chart, but they're still on this weekly chart. So kind of ignore the lines right here. So if I look at a weekly chart, you'll see if I were to bring in I'm going to bring in another trend line from this swing low to this swing low, okay? And then extend it out. And you'll see that we are still above that trend line. So far as the weekly is concerned, all is still intact. We don't have a problem yet. So that's really important to see. By the way, I'm TradingView. TradingView is a free software you can use online. I love it. You can move it around. It's almost like my e-signal. but for a fraction of the cost. And down here, looks like 41 new followers to come in to follow me. You can follow me here at TradingView. So, but let's go to a monthly chart. Now, the monthly chart, now this is interesting here. Forget all the lines because that's on my daily chart. Look at this huge run we've had. Big run to the upside. I have it's an 8-period EMA, exponential moving average. That's this orange or gold line coming up. We are still above that gold line, that EMA, that 8 EMA. The last time we closed below it was back here, 2012. It's literally been 2.3 years since we had a close below the 8 EMA. So to say that the markets are overbought is a reality. This is a run of runs. You just do not see monthly runs this long, even daily runs that long. Look at the size of this. If I were to measure the size, even from this swing low, count the squares here going higher. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I mean, this thing has gone up, good 10. That's not even counting all this. You just don't see that sort of run anywhere else. Even here, this is back in the run of the 90s, the tech run, the big bubble. I mean, that's gone up only 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So that's about the same run before we had a serious technology bubble correction. I mean, we have that same run here, but actually, if I count it from down here, there's never been a run like this that we see on the charts. This is just an anomaly, very strong. So things that go up far tend to drop far. So that's something I'm waiting for, a nice sizable correction. These type of pullbacks, we forgot what they feel like. So they are reality. These pullbacks do happen, and we are due for one of those pullbacks. Gang, it's just a matter of time. It will happen. It's not if, it is in fact when. We will have a nice size pullback at some point, and I think the higher we go, the more probable it is that we will start to pull back, because the markets are doing something that they just have never done, at least in my tenure of 17 years of trading actively in the broad market. So that says a lot. And if you look here at actually, before I'm going to look here at the banks, we're looking here at a daily chart, and we had this symmetrical triangle, boom, to the upside, went up. It caught up into those resistance areas. Remember, those resistance areas came from these swing highs right here. I'm going to move that one, just make sure it gets right where it's supposed to be. Very particular on how those things are set. And we do teach that in our training. But this is back here, about a year ago, March 2014. And sure enough, we get to the same levels, and we're pulling back with a huge drop here. I mean, the banks were off on Friday on 1.55%. Big drop, big close below the 20-day moving average. So problematic. If I look here at a weekly chart, you'll see that we went higher, touch those same highs, retrace back. So it's, we could be in danger here. We've been doing nothing but sideways movement. Now look at this. Now we're looking at a weekly chart. Now follow me here. If you look at what's happened in the last 1, 2, 3, 4, 5 months, look at this. In 5 months, we've been in a trading range going sideways in the last 5 months. If I go to the Spiders weekly chart, the last 5 months, we've been going straight up. So right there is your relative weakness, with financials not supporting the rally that we're seeing here in the major indices. So that is an underlying current, and this is a big time warning. Now, I'll tell you, you guys who are amateurs and who just getting started, you'll take my words and you'll run with it like I'm saying go short the market Monday because we're going to crash and burn. That would be foolish to say. So when I say warning, I'm saying there's thunder in the distance. I'm saying we are set up to drop. Doesn't mean we're going to. I mean, we've had several times where we were set up to drop in the past, and we keep marching higher in this environment, this big bullish environment, especially with the Feds doing their easing. And that's obviously going to be coming to an end. Interest rates are expected to go higher, and they're saying that it's imminent. It should happen before June. So there's a lot of catalysts here that should send the markets downward, and it could be a nasty little drop. So do yourself a favor, pay particular attention to the videos that we put out on a daily basis. We'll keep you abreast of the latest. If you like the video, click like below. If you have a comment or a thought, if you're thankful for these, leave a comment. I love reading them. They're very encouraging. Love hearing back from the base. There's followers from 155 countries that follow this. I mean, tens and thousands of traders that listen to this. I thank each and every one of you. I think that we give good, rich, valuable information and education to each and every one of you. So with that said, couple things. The website, if you're just getting started, go to freeonlinetradingeducation.com. Once you're there, take the 101 courses. However, I want everybody to eventually mature and to grow into the more advanced stuff right here. Trading education, that's where you go to Grok Trade. This is where we give you the best of trading education in a more formalized way. Make sure you take the 101s first, and so you can properly get the most out of the 201s. Much more advanced, a lot more information. This is going to teach you how to trade. And then the biggest part of this, we drive everyone to mentoring, because that is where both Mark, the Meerkat, where Carolina, where myself, we all got the most out of our trading education through mentoring, sitting one-on-one, asking our questions at our speed, and having somebody guide us through the turbulent waters of trading. There's a lot of dangers out there, and you can lose a lot of money. The idea is to put a tourniquet on the bleeding, turn things around, and turn your expensive hobby into a career change. We can help you do that. Share us with a friend. If you like what it is that we deliver to you with the technical analysis, please hit share below. Share us with a friend. Copy the URL. Share us. Let people know about this warning. Do them the biggest favor ever. We're here to support you. Take care, and all the best. Safe trading going into the future here.